It started with Venezuela. Now Trump has his sights set on Greenland, and financial markets are about to discover what military adventurism really means for precious metals. Hours after U.S. forces captured Venezuelan President Nicolas Maduro in a brazen weekend raid, Katie Miller, wife of Trump's Deputy Chief of Staff Stephen Miller, posted an image that sent shockwaves through diplomatic circles. A map of Greenland draped in the American flag with one word, soon. Then President Trump confirmed what traders feared most. We do need Greenland, absolutely. We need it for defense. Denmark is now in what analysts call full crisis mode, and gold just surged 2.5% in a single session. The domino effect nobody saw coming. This isn't about one island anymore. Trump has already warned Mexico and Colombia could face military action over drug trafficking. He's threatened to overturn Cuba's government. He's musing about making Canada the 51st state. Danish Prime Minister Mette Frederiksen issued an urgent statement. The U.S. has no right to annex any of the 3 countries in the Danish kingdom, adding a pointed warning to stop the threats against Denmark, a NATO ally. But here's what has markets on edge. Greenland is a self-governing Danish territory and NATO member, meaning an attack on Greenland could trigger Article 5, NATO's collective defense clause. One analyst warned, a possible U.S. intervention in Greenland is now the biggest source of risk to the transatlantic alliance and intra-NATO and intra-EU cohesion, arguably far greater than those presented by Russia's invasion of Ukraine. The world order is cracking, and gold is the lifeboat. Gold's immediate response, $44.30 and rising. Spot gold rose as much as 2.5% on Monday, climbing above $4,430 an ounce as investors scrambled for safety. This wasn't a technical breakout. This was pure geopolitical panic buying. Rising geopolitical tensions are enhancing the haven appeal of gold and silver, and the Trump administration just handed precious metals bulls exactly what they needed. Sustained, escalating uncertainty that shows no signs of cooling. The fundamentals were already explosive. Now add territorial expansion threats against NATO allies to the mix. Why Greenland matters more than you think. Trump's obsession with Greenland isn't random. The territory's immense mineral wealth drives Trump's desire for U.S. control, and as the Arctic climate rapidly warms, China and Russia have been moving into the region, turning the northern reaches into a resource-rich battleground. Trump claimed without providing evidence that the island was surrounded by Russian and Chinese ships, though the real prize is what's beneath the ice. Rare earth minerals, uranium, and resources that could reduce U.S. dependence on Chinese exports. Last month, Trump named Louisiana Governor Jeff Landry, who publicly supports annexation, as special envoy to Greenland. The diplomatic groundwork for something bigger has already been laid. The 3-way market collision gold, the safe haven. Supercharged gold doesn't need permission to rally anymore. The latest push higher comes as traders bet that the Federal Reserve will cut interest rates twice in 2026, and now you can add military interventionism to the list of catalysts. Banks are scrambling to raise targets. Swiss bank UBS anticipates that gold could increase as high as $5,400 under great U.S. political and economic tension. Goldman Sachs has a base case of $4,900 with risks to the upside. The structural support remains intact. Central banks are competing with ETF investors for limited physical supply, and emerging market central banks, particularly China, are accelerating purchases to hedge against exactly this kind of Western geopolitical chaos. The dollar, caught in the crossfire. Here's the paradox killing currency traders. The dollar has come under pressure amid growing expectations that the Federal Reserve will begin easing monetary policy in 2026, which normally boosts gold. But geopolitical crisis often triggers dollar strength as a safe haven. So far, the dollar weakness is winning. A softer dollar typically boosts demand for dollar-denominated commodities by making them cheaper for holders of other currencies. And with the greenback already down 6% in 2025, its worst year since 2017, the path of least resistance remains down. But if Trump's threats escalate into actual military confrontation with a NATO ally, all bets are off. The dollar could spike violently before collapsing under the weight of shattered alliances and global trust. Silver, the stealth rocket. While everyone watches gold's drama, silver gained almost 5% on Monday's Greenland news. That's double gold's move, and it's not done. Silver benefits from risk-off flows and U.S. dollar weakness, but it has additional drivers that have helped it outperform gold this year, including its recent addition to the U.S. Geological Survey's critical minerals list, highlighting its strategic importance for defense AI infrastructure and clean energy. Here's the kicker. If Trump is serious about controlling Greenland's mineral resources, silver's status as a critical defense metal makes it a national security asset. Institutional buyers are waking up to this reality. The 4 scenarios traders must prepare for scenario 1. Trump backs down, 25% probability. Gold consolidates at $4,300, $4,400, stabilizes, silver corrects to 70. Trading play, take partial profits, wait for better entry. Scenario 2, diplomatic standoff continues, 40% probability. Gold grinds toward $4,600, $4,800. Dollar weakens gradually, silver targets 80, $8,500 trading play. Buy dips, hold core positions. Scenario 3, economic coercion escalates, 25% probability. Trump threatens tariffs or sanctions against Denmark or EU. Gold breaks $5,000. Dollar volatility spikes. Silver explodes toward $100 trading play. Aggressive accumulation on any weakness. Scenario 4, military action, 10% probability. NATO crisis, possible Article 5. Trigger gold surges to 5,500 plays. Dollar crashes initially, then rebounds violently. Silver hits $120, $150 trading play. Physical metals, defensive positioning, prey, what the smart money is doing. Right now, institutional flows tell the real story. Gold and silver once again. Enjoy a fresh bout of buying pressure as professional traders recognize that Trump's willingness to plunder Venezuelan resources signals additional risk for nations investing into U.S. assets. Central banks are watching. Emerging markets that already worried about dollar weaponization just got confirmation that geopolitical might trumps international law in Trump's world. Expect accelerated de-dollarization. The Fed may struggle to deliver multiple rate cuts next year amid persistently elevated inflation, but if geopolitical chaos tanks the economy, they'll have no choice. Either way, precious metals win. The technical picture, breakout or fake out. Gold closed Monday at 4,230, testing the psychologically critical zone. The October high at 43.81 is now solid support. But here's the danger. A quieter start to the year would not be surprising after 2 powerful years. But any new policy shift, geopolitical tension, or structural shock can reignite momentum quickly. Translation? This rally could pause, but it won't reverse, not with Trump publicly threatening NATO allies. Silver's technical setup is even more explosive. Having broken through its multi-decade resistance and with industrial demand from AI, solar, and EVs providing a floor, any geopolitical spike could send silver into price discovery above $75. Your trading blueprint for the Greenland crisis. For conservative investors, allocate 10 to 15% to physical gold and silver. Now use dollar cost averaging if prices feel extended. View any 5 to 8% correction as a gift. Your risk isn't being too early, it's being too late. For aggressive traders, buy gold futures on any dip to $4,350. Target $4,600 short term, $5,000 medium term. Stop loss below $4,250. Silver is higher. Risk reward. Trade 50% of your gold position size. For miners and royalty players, major miners will leverage gold's move to 3LX. Junior explorers with Arctic critical mineral exposure could explode high risk, high reward, size accordingly. For dollar holders, hedge at least 20% of cash with precious metals. This isn't about gold going up. It's about fiat going down. Diversification across currencies and hard assets is now survival, not strategy. The bottom line, this changes everything. 24 hours ago, gold traders were focused on Fed rate cuts and technical levels. Now they're pricing in the potential collapse of the Western alliance system. Denmark summoned the U.S. ambassador. Greenland's prime minister said on Facebook, when the president of the United States talks about we need Greenland and connects us with Venezuela and military intervention, it's not just wrong. This is so disrespectful. But Trump doubled down on Air Force One. We need Greenland. It's so strategic, though he added, we'll worry about Greenland in about 2 months. Let's talk about Greenland in 20 days. The markets have 20 days to prepare. The clock is ticking. Gold doesn't need a crisis to rise in 2026. It simply needs the world to behave the way it has been. Elevated debt, policy uncertainty, fragile alliances, and a dollar that no longer dominates as it once did. Trump just accelerated all 4 trends in a single weekend. The Greenland gambit isn't a distraction. It's the catalyst that transforms 2026 from a good year for gold into a historic one. The question isn't whether gold hits $5,000 anymore. It's whether you'll be positioned when it does, or watching from the sidelines as the world order reshapes and precious metals become the only assets that matter.